The bulk of my portfolio is in dividend stocks, although I've also invested in two of the best high-growth tech stocks. On one position, I'm down close to $13,000, and it doesn't feel great. But, of course, I haven't put all my eggs in one basket. On the other growth stock, I'm up close to $20,000. Even with these short-term price swings, I'm not selling. I'm not locking in the losses or the gains. The reasons that I've invested in both of these tech stocks, they haven't changed. Of course, each one has its own unique set of risks, but the growth potential is huge. The risk to reward, it was simply too good to pass up. Already, these growth stocks are cash flow machines, and they're reinvesting heavily into high growth segments. But even with heavy reinvestment, to the tune of billions of dollars each year, cash keeps piling up. So long term, I think there's the potential for big capital gains through share price appreciation, and also long term, they might start paying dividends. I'm going to highlight both of the biggest risks and growth opportunities for these two tech companies. I'll show you why I've put a good chunk of my life savings into these companies, and also why I continue to hold tight, even in the face of constant pessimism. And before diving in, I have a quick favor to ask. Can you please take 2 seconds and just go down and tap that like button below, because that helps out my YouTube channel. And thanks a lot to my subscribers for the continued support and comments. I still read every message down below. So for the first company, many people have negative emotions when they hear the name, Facebook. And are you one of them? Either way, just hear me out. When it comes to investing, you need to leave your emotions at the door, at least for investing well. It's important to take a very objective, logical approach. Facebook, it's an unloved company, but it's one of the best investing opportunities in 2022 and the years ahead. Heck, if you don't like the company, you can still profit off it. Then if you want, you can donate your profits to your favorite charity. So here's an undeniable chart that shows why Facebook, recently renamed Meta Platforms, is one of the best high-growth tech stocks. Even at the size that it's already reached, it's pushing the sales to even higher levels. It's impressive. So I bought back in 2018 and revenue has roughly doubled since. Back then, there were just as many negative headlines, if not more. The share prices had dropped due to the Cambridge Analytica scandal and some other news. Facebook continues to take non-stop punches from both sides of the political aisle. But is it warranted or just pandering for votes? I'll leave that up to you to decide. Sure, there are plenty of issues with Facebook to overcome. For example, it's created a faster feedback loop for news and engagement. And even though Facebook and other platforms are relatively new, human behavior hasn't changed. This is something a lot of people overlook. People tend to engage more with negative content, and also online, echo chambers form. This can help further polarize groups. Although this is not unique to Facebook, it's a truth across the internet. In a sense, any social media platform is similar to the Hydra. You chop off one head and two more are going to pop up. Although this analogy, it's a bit too negative. Facebook adds a lot of value for users. Otherwise, people wouldn't stick around. Some have chosen to leave, and that's fine, but it continues to grow nonetheless. Facebook and other platforms can create subtle nudges to help reduce some of the negative impacts, but it's a balancing act. If you reduce what engages users, they're going to just gravitate towards other platforms with better engagement. As mentioned, human behavior, it hasn't changed. And now a really good book on this end is called Hooked by Nir Eyal. It's a book that I've recommended to some good friends over the past few years. To sum up why I'm okay with investing in Facebook given the widely stated downsides, there are many overlooked benefits. If you take an objective look, you're going to see that Facebook spends billions each year both building and improving useful products. These are useful products that anyone can use for free. No one has to use them, and there are plenty of alternatives, but they continue to do so because of the many benefits. Now, Facebook and Meta's other platforms have roughly 3 billion monthly active users. That's about close to 10 times the size of the total US population. And Meta, it's only continued to grow by adding more value to its users. But there are limits to user growth. We share this world today with close to 7.9 billion other people. So even with user growth limits, Meta's making moves to better engage and monetize its current users. As you can see, worldwide, average revenue per user, ARPU, has climbed from below $2 in 2012 to above $10 today. Meta has done an excellent job at helping both large and small businesses, as well as many millions of small creators around the world. Meta's platforms are some of the best and most cost-effective places to reach new customers or reach new audiences and customers. Looking to the future for growth, we must look at current day constraints and also some of the early trends that are forming. One of the biggest constraints is Meta is largely at the mercy of hardware providers such as Apple. Companies that create phones and computers, they have a lot of control over what software they allow. Although there are early signs of what the next major computing platform will likely be. With Facebook's rebrand to Meta Platforms, it's making bold moves that virtual reality and augmented reality, they're the future. And looking at the improving adoption as well as their improving use cases, that's a pretty damn good move to make. Now, it's going to take many, many years to play out, but Meta is really investing heavily into advancing these future technologies. Meta Reality Labs invested roughly $10 billion last year, and in the years ahead, that's only going to increase. To say the least, I'm excited about what innovation is going to come from this company. It's also going to give Meta new revenue streams as well as improve its existing advertising potential. Meta Platforms, it's already a cash flow machine, and it isn't resting on its laurels. Valuation-wise, it's not as cheap as it has been or when I bought in, but it's still one of the best high-growth tech stocks in 2022 and beyond. For the second high-growth tech stock, the one that I'm down on, it's Alibaba. Although that means you can get a better entry price than I did. And also one of the world's best investors, Charlie Munger, he's invested in Alibaba, so he clearly sees the value potential. If you've been following Alibaba and Chinese tech stocks, the biggest risks, they're pretty easy to point out. There are geopolitical and regulatory risks. If tensions get worse between China and the US, Alibaba stock, it will almost definitely drop further. Although I think there's a good probability that we've seen the worst of it. Reducing international trade and investment, it's a net negative for both sides. And in both China and the US, there's steps being taken to rein in the massive tech companies. Nonetheless, it's a balancing act and neither country wants to stifle growth too much. Overall, Alibaba's fundamentals, they remain solid and its stock trades at a steep discount. People often compare Alibaba to Amazon, and there are many similarities. So here's Alibaba's revenue growth over the past few years. And to reduce errors and inconsistency with currency conversion, I've just left these numbers in yuan. And for perspective, the 2021 717 billion yuan, that's roughly 113 billion US dollars today. As one of the best high-growth tech stocks, Alibaba, it just continues to push sales higher. Now, I'm not going to give a full company review in this video. You can check out my past Alibaba video for that, which I'll drop a link to down in the description below. Instead, I just want to highlight one of its fastest growing segments. So similar to Amazon, Alibaba has invested heavily into providing cloud services. Even with all the negative Chinese stock headlines last year, in 2021, the segment is up 50% year over year. It came in close to, or just over 60 billion yuan, and it still has plenty of room to grow. Alibaba is well diversified and growing on many fronts. Its core businesses are already cash flow machines and cash just keeps piling up. This gives it more than enough room to invest in high growth segments and really play the long game. Alibaba stock, it has been very painful to hold on to, but it's still one of my highest conviction investments for the long term. Now, with both Alibaba and Facebook, or these high growth tech stocks, there's going to continue to be both ups and downs. When it comes to investing, that's the cost of admission, and it's important to diversify. With the scale these companies have already reached, there's plenty of geopolitical and other regulatory pressure, although both are well positioned to weather further storms. And looking at the trends and current valuations, these are just some of the best investing opportunities today. For a better breakdown of why I bought Alibaba stock, check out this video. And do you think there are even better investing opportunities or companies I should add to my portfolio? Let me know in the comments below. And once again, I'd really appreciate it if you just tap that like button down below, as well as subscribe. Thank you.